Bismillahirrahmanirrahim. Dear viewers and listeners, Assalamu alaikum. This is the third segment of monologue titled Riba and Interest. From this point onward, the key area of focus will be a comparison between interest as an economic concept and riba or usury as a theological concept. The purpose is to enlighten the listeners and the viewers that how a poor understanding on a particular subject distorts the spirit of wisdom provided by the glorious Koran. I would request the audience to critically listen to this monologue so that they may understand the real difference between riba and interest as expounded in the glorious Quran. A dispassionate analysis of relevant verses of the Quran highlights the fact that interest as an economic concept and riba as a theological concept are two distinct terms. Besides, interest in a business loan transaction must be distinguished from a domestic loan transaction to understand financial implications of two streams of interest. However, a vast majority of theologians erroneously equate interest of all forms with riba due to historical reasons associated with the adoption of the theory of taqleed, that is blind following. Therefore, we need to examine the two terms in detail to determine the veracity of such hypothesis. A critical analysis of relevant verses of Quran highlights the fact that in reality the issue of riba is primarily an economic issue because variables like interest, profits, wealth, loans, charity, etc. are all related to economic activity. Therefore, it is imperative to demonstrate that how excess or abnormality in accumulation of personal wealth through riba is injurious for the mankind in every sphere of life. It will enable the audience to understand the rationale of the eternal wisdom provided by Quran in these verses. The subject of economics categorizes all resources, that is economic wealth, into four broad categories. These resources are called the factors of production. The four factors of production include 1. Land, 2. Labor, 3. Capital, and 4. Enterprise. The term land would include all natural resources such as fields, mineral deposits, fish stock, forests, etc. Labor includes all human capital that works as a force in the factories and offices as operational staff and managers. The term capital includes all physical capital, that is buildings, factories, roads, machinery, etc. and financial capital in the form of money advanced as loan to a business. The term enterprise includes the owners of a business who mobilize other factors of production, including making investment in business as equity to generate an economic activity. Scarcity is the fundamental economic problem, implying that all factors of production or resources are always in limited supply vis-a-vis their demand at any given point in time. This fact is beautifully explained in chapter 42, verse 27 of the glorious Quran in the following words. If God were to grant His plentiful provision to His creatures, they would act insolently on earth. But He sends down in due measure whatever He will, for He is well aware of His servants and watchful over them. Therefore, God further commands in chapter 7, verse 31 of the glorious Quran, Eat and drink, but avoid excess. He does not love the intemperate. Since the four factors of production are always limited in supply, they command a price for their use. For example, the price for factor land is called rent. For labor, it is called wage. For capital, it is called interest. And for enterprise, it is called profit. The economic theory also suggests that under a competitive business environment, where the producers and the consumers jointly influence the market forces of demand and supply, the price for any factor of production, including all goods and services, will eventually settle at the equilibrium level. The equilibrium price is the level where the demand and supply for a factor of production will be matched, implying a consensus amongst the producers and the consumers on the production and consumption of a factor of production. This equilibrium price will ensure that economic resources are consumed in an optimal manner for the benefit of producers and consumers, that is, all segments of the society. In order to achieve this objective, economic theory promotes perfect competition and fair market prices so that no single individual or organization may dominate the market to thrive at the expense of others, a form of riba. Thus, fairness and perfect competition in economic activity minimizes possibility of riba. Since God is the ultimate heir to all resources in the universe, therefore, men as trustees, that is, holders of resources, must utilize these resources for the benefits of all beneficiaries, including weaker segments of the society, in an equitable manner. Excess in all forms is always short-term and devoid of morality. It is also not sustainable due to built-in rectification mechanism in laws of nature. Since all factors of production are limited in supply vis-a-vis their demand at any given point in time, the scarcity problem mentioned earlier, therefore they command a price. This is called the cost or reward of a factor of production. As it is explained earlier, the cost of using factor capital, both physical and financial capital, is called interest. However, majority of the Muslim scholars confuse the very concept of interest as it is used in economics, as demonstrated in the following illustration given in table 1. Assume that A and B are two individuals living in a community. A possesses his wealth in the form of a building, say worth $150,000, while B possesses wealth in the form of money or cash equal to $150,000. Now suppose that A lets out his building to a business venture at an annual rental of 10%, that is $15,000 of the current market value of the building for 1 year, while B advances commercial loan of $150,000 to the same business at an annual interest of 10% for 1 year. We assume that at the end of year 1, the market value of the building has risen by 8% due to inflation as a normal phenomena, while the purchasing power of money has fallen by the same percentage. This situation is tabulated in the table. If you just look at the figures in the table, these figures reveal that due to inflation, A has benefited by $27,000 because the value of his building has increased from $150,000 to $177,000. That also includes rental payment by lending his building, while B has a net benefit of only $3,000 that is the difference between 1,50,000, his original financial capital, and 1,53,000, that is the closing value after taking into account the 8% inflation effect, that is reduction in the purchasing power of money. It may be noted that if A lets out his building to somebody for a commercial purpose, he will charge economic interest, also called building rental in day-to-day life, on it as a cost of using building, that is the physical capital. While if B lends his money to somebody for commercial purposes, he will also charge economic interest on his financial capital. However, the orthodox scholars will allow A to charge interest as a rental income, while they will condemn B for charging interest on his financial capital as riba, although the real gain on physical capital is normally on the higher side as demonstrated above. This simple illustration highlights the fact that a poor understanding of the subject of economics destroys the true meanings of a verse of the Quran because of out of context interpretation. The economic theory also suggests that the equilibrium price of a factor of production is determined through the interaction of its demand and supply at any given point in time. This implies that when demand exceeds supply, the cost of a factor of production will rise and vice versa. Consequently, increase in the demand for land, labor, capital, and enterprise will increase the rent, wages, interest, and size of profits. If the supply of factors of production is not matched with the increase in demand. One visible explanation of this phenomena is the fact that interest rates as cost of capital are very low in the developed countries, mostly in a single digit figure, when compared with the developing country where the interest rates are always in double digit figure. The reason is that inter alia there is abundance of capital in the developed countries due to enhanced economic activity and accumulation of capital in the hands of large segments of the society over a period of decades. Therefore, demand for capital vis-a-vis its supply has reached the optimal level, resulting in lower interest rates. This analysis highlights two things. Firstly, interest is the cost of factor capital that must be paid by a business firm if it has to borrow capital for economic activity. Secondly, with enhanced economic activity, the size of capital in the form of accumulation of national wealth increases, leading to lower interest rates. Now the question arises whether interest can be called riba. The answer must be a no. Otherwise, the cost of all other factors of production must also be equated with riba on the basis of scarcity principle. And if commercial loans are offered free of interest, no creditor will ever advance any loan to a business person, and the economic activity will squeeze drastically. It may also be noted that loan capital is always a cheaper source of finance when compared with equity or owner's investment, because it provides a tax shield benefit. That is why large corporations borrow millions of dollars through debentures and other loan instruments to earn profits from this cheaper source of finance. They claim interest payment as a tax deductible expense and reduce their tax liability. Therefore, zero rate interest is possible if capital becomes a free resource and there is no scarcity of this factor. It may also be appreciated that a commercial loan is sought to expand borrower's wealth at the expense of the lender. So the borrower or debtor must compensate the lender or creditor by sharing his profits either in the form of a fixed return, such as a fixed rate of interest or fixed rate premium on the principal, or a variable return as interest or premium. A rational analysis of above referred verses of Quran highlights the fact that riba will operate in a commercial transaction only when one party tries to benefit disproportionately at the expense of the other party in the capacity of a buyer or a seller, a borrower and a lender, etc. Normal interest and riba are two distinct concepts that have been confused by the theologians due to poor understanding of the subject of economics. Interest will only become riba when it is abnormal and exploitative in nature. Some theologians relate interest to riba because of fixed nature of interest. Their argument is that since interest rate is fixed in nature, while profit rates are variable in nature, therefore interest and riba are akin to each other. This argument is not supported by any relevant verse of the Quran mentioned in this monologue, because no verse refers to the fixed or variable nature of riba. In order to understand the true nature of interest, it is important to have a thorough understanding of nominal and real interest rates in an economy. The nominal rate of interest is the rate which includes an element of inflation, while a real interest rate is always net of inflation rate. Since the inflation rate, due to multiple factors, is variable in nature, therefore the real interest rate that measures the purchasing power of income earned in the form of interest is always variable between different points in times. This fact is demonstrated through illustration 2 given in the following table. Suppose A has borrowed $1,000 from B for 3 months at a nominal interest rate of 1% per month. We assume that the inflation rate during this period is 0.3%, 0.4%, and 0.5% for months 1, 2, and 3 respectively. Now we can calculate the real interest rate income for B. This will be 0.7%, 0.6%, and 0.5% for months 1, 2, and 3. This simple illustration proves that real interest rate as a source of income is always variable in nature. The important point to bear in mind is that the purchasing power of fiat money, that is currency notes, as opposed to commodity money such as gold and silver coins, is always eroded with inflation, and the nominal rates of interest that includes element of inflation are never a true measure of the purchasing power of money. Therefore, interest as a source of income in real terms is always dependent upon the interaction between nominal interest rates and the inflation rates during the tenure of the loan transaction. In any case, the real rate of interest is always variable because of variable inflation rate. Therefore, interest should not be conceived as a fixed rate income. It is as much variable as any other source of income like profits of a trade or rental income due to the effect of inflation on the purchasing power of money. Some Muslim scholars condemn interest as a double-edged sword, because when real interest rates are falling during the tenure of loan, it is the lender who will suffer, while in case of rising interest rates, it is the borrower who will suffer. But this argument is naive, because changes in real interest rates are influenced by the monetary policy of the government, that is the central bank, for better economic growth that may be beneficial for all stakeholders, including lenders and the borrowers. Besides, even in equity mode of transactions, possibility of a profit or a loss is always present, which means possibility of benefit or loss to the equity holder in either case. Therefore, any business transaction, whether interest based or equity based, will never guarantee an exact return either to the lender or the investor, with reference to the purchasing power of money during the tenure of an economic transaction. It is also argued that interest is a reward without any effort on the part of the creditor, so morally it is not justified. But what about rental income of a property, which is paid to the owner of a property who is also earning rental stream of income without any current effort, because the property must have been constructed on the basis of past efforts? What about wealth acquired through inheritance? It is permissible in Islam. Quran supports enjoying inheritance share without any effort. Therefore, based on above analogy, present effort is not a precondition to enjoy present benefits of any type. The creditor should not be denied a fair return in the form of normal interest on his capital, physical as well as financial, lent for commercial purposes. This would be contrary to the principles of fairness and hence not tenable in the sight of God. Some theologians argue that interest is riba because it is a risk-free reward, while profit of a trade is a risk-based reward. Therefore, absence of risk is another reason to classify interest as riba. This argument is again naive for obvious reasons. Firstly, interest in a business loan transaction is never a risk-free reward. The risk of a creditor or a debenture holder is relatively less when compared with the risk of an equity holder, because the creditor is entitled to the right of a prior claim on the return on his investment, including the repayment of principal amount in case of liquidation of a business over equity investment. But at the same time, his return, that is interest income, is significantly less when compared with the return on equity in the form of dividend income and share price growth. It may also be noted that in modern businesses, major chunk of loan capital is borrowed by large corporations who have limited liability, implying that in case of a loss, the creditor can only get back his principal amount of loan that is payable from the net business assets of the corporation. If the net assets fall short of the loan capital, the creditor must write off the loss as a bad debt. Therefore, risk of loss for a creditor is also present even in a business loan transaction. This is in line with the financial theory principle that risk and reward go hand in hand, implying higher the risk, the greater the reward, and vice versa. Secondly, Quran never insists that risk taking is an essential element to justify permissible income in any form. Otherwise, gambling, where the risk is the highest due to unexpected outcomes, would never be condemned in the Quran. Now we are going to demonstrate this point further through illustration 3. Suppose A, B, and C are three individuals living in a community. They plan to start a business by investing $50,000 each. We assume that A and B have the expertise and the time to fully participate in the day-to-day affairs of the business, while C does not have such abilities. Therefore, it is agreed that C will provide his share of $50,000 as a loan at an annual interest rate of 10% with a prior claim of repayment of loan amount in case of liquidation of the business, while A and B will share profits of the business equally as equity holder. It is further assumed that after 1 year, the total profit earned by the business is $45,000. The division of profit and payment of interest is shown in the following table. Now the above figures demonstrate that interest income earned by C is significantly low, only 11% of total profit when compared with profit income, that is 44% each earned by A and B. This is in line with the financial management principles that states lower the risk, lower the return. If C's investment of $50,000 as a loan capital is protected with a prior return claim, he's also getting significantly lower share in profits in the form of interest income. This is in line with the principles of equity also. So interest and riba are two distinct concepts. In modern economies, with a focus on welfare economics, the government, keeping in view the macroeconomic policy objectives of the economy, inter alia also governs the central rate of interest through its central bank as part of its monetary policy. All other interest rates are determined with reference to this central interest rate, keeping in view multiple factors like tenure of the loan, risk profile of the borrower firm, availability of capital, GDP growth targets, etc. These objectives are set to benefit every segment of the economy as far as possible. The monetary policy tries to regulate the interest rates in a manner that may yield optimal economic growth to benefit the majority of the population. Therefore, can we call interest as unjustified even when Islam also promotes equitable governance? It may be noted that in developed countries of the world, the interest rates are constantly falling and they remain within a single digit figure due to rationalized monetary policies of those governments and availability of abundance of capital. One plausible conclusion is that if the economic system is based on equity and social well-being of the majority, the interest rates are bound to fall in the long run due to fair accumulation of capital in the hands of every segment of the society, reducing the element of riba, that is excess, within the interest rate structure. I conclude the third segment of my monologue on the complex subject of riba and interest with the prayer that Allah Almighty may bless this effort. Please do subscribe and share my channel for updates. It's absolutely free.